started, I'd also like to mention our flagship event. That's the AGAZ Summit. It's going to be held this year, the third annual event in Mississauga, Ontario, on September 21st. It's a day-long event where we bring startups and other ecosystem players under one roof. Encourage you not to miss the summit. I've attended, and there's a lot of value, especially for the startup community. Early bird discounts will be announced soon for participants, and we've sent to those of you who registered for today's webinar. There's also partnership opportunities, which we'd be happy to speak with you about. So the theme for today's event is non-dilutive capital, how to fund your startup with government grants and credits. So as small business owners, we're always looking for ways to help fund our business. You don't want to be leaving money on the table. So if that is you, then you've come to the right place today. Given that I'm in Markham, Ontario, I'd like to begin with the land acknowledgement. So we begin today by acknowledging the traditional territories of Indigenous peoples and their commitment to stewardship of the land. We acknowledge the communities in Circle, the northwest, south, and eastern directions, the Haudenosaunee, the Huron-Wendat, the Anishinaabe, Seneca, Chippewa, and the Mississaugas of the Credit peoples. We share the responsibility with the caretakers of this land to ensure the dish is never empty and to restore relationships that are based on peace, friendship, and trust. We're committed to reconciliation, partnership, and enhanced understanding. Before we begin our webinar, there's several housekeeping items. Our presenters will speak for approximately 35 minutes. Then we'll have time for questions from the audience. What we'd like to do is ask if you would like a question, pose a question, that you please put it in the chat. I can see by the number of people and where everyone's joining from that people are really familiar with the chat functionality. So please put your questions in the chat. We're going to do our best to cover as many of these questions as possible. Also, just to note that the speakers will be providing their presentation to attendees who requested in the chat. So please do that as well. Just looking, I see people from my former home province of British Columbia. I see people from Surrey and Victoria, also some people from overseas as well. So what I'd like to do next is introduce our two speakers today. Both of them are from SRJ Chartered Professional Accountants. Arif is a tax partner where he is at SRJ Chartered Professional Accountants. He's dedicated to transforming how businesses approach their finances through innovative cloud-based solutions. He's got extensive experience in Canadian taxation and specializes in advising small and medium-sized businesses and e-commerce enterprises. He's passionate about guiding small and medium-sized businesses through effective tax optimization, efficient bookkeeping, and strategic financial management. Arif has a master's in taxation from the University of Waterloo and a Bachelor of Commerce from the University of Toronto. Arif is in Milton, Ontario. His colleague is Amir Daoud. Amir is a senior manager with the same firm, SRJ Chartered Professional Accountants, and he helps innovative companies translate real-world R&D into funding through the SR&ED program. He transitioned to the field in 2021 after starting his career in research engineering. He also has a hybrid academic background spanning mechanical engineering at the master's and bachelor's level in computing technology from the University of Ottawa. And Amir is joining us from La Belle Province. He's in Montreal. So just as we get started, for those of you who are not aware, non-dilutive capital is funding for your startup receives without giving up ownership equity in your company. In plain terms, it's money you don't have to sell a piece of your business to get it. So while many Canadian founders are aware that government support exists, a significant number miss out because they are ineligible. Miss out not because they are ineligible, but because they find the qualification process complex to negotiate. This session is designed to address exactly that. And I'm going to turn the floor over to Amir and Arif. And I would ask that, again, if you have any questions, please put them into the chat. Gentlemen, the floor is yours.
Thanks, Brent. Thank you for the introduction, and thank you to you and the Canada Chartered Association for having us here today. Obviously, very excited to talk to everybody, and hopefully, we'll give everyone a bit of nugget to walk away with today as well. So let's dive in. We have a brief agenda, but we'll go into quite a bit of detail in terms of SR&ED versus grants, looking deeper into what SR&ED is, and Amir will really take us through a good journey on that front. And then we'll close it off with talking about stacking, and finally just discussing some hiring subsidies that are, I'll call them popular or more commonly known hiring subsidies, and what those entail. So that'll be our agenda. I'll pass it over to Amir to kick us off.
Awesome. Thanks for the intro, Brent. Thank you, Arif. So I want to start with the comparison between SR&ED and grants. This is a question that a lot of you ask yourselves. And think of SR&ED as something that happens after the fact. It's something that is retroactive. So you go spend your money out of pocket on activities that qualify for research and development. And come the year end, at the end of your tax year, you submit your corporate tax return and look back at your eligible expenditures. With that corporate tax return, you submit your SR&ED schedules, and those SR&ED schedules outline the eligible work as well as the costs incurred. Grants, on the other hand, they take place before the work has taken place for the most part, or sometimes during the course of that effort. Um, the one thing I like to point out, which is a main difference between SR&ED and grants, is that SR&ED is rules-based in the sense that if you fulfill the criteria of technical eligibility and you have eligible costs, you typically are entitled to receiving your refund. On the other hand, grants are not so objective because they are subjected to limitations. So the pool of funds that are available for disbursement is limited most of the time, which means that when the submission is reviewed, it is compared subjectively and it is at the discretion of the reviewer. Of course, for SR&ED, there is also an element of subjectivity, if we're honest, because if the claim gets selected for audit, it gets reviewed by a research and technology advisor from the CRA, and there is a little bit of convincing there to be done. The return on the dollar for SR&ED, it's a range from 35 cents on the dollar all the way to 75%. Grants, on the other hand, typically cover between 50 and 80% of the costs. But the one thing to keep in mind is that for SR&ED, you need to pay out of pocket first in the fiscal year, and then you get some of that money back. Whereas for grants, it's typically a co-contribution. So you spend some of that money, 20% or 50%, and the grant takes care of what is left. So you might be asking yourself, what should I pick, SR&ED or grant? I mean, both are great. There's no real choice to be made there, but there is something that I believe everyone here is aware of, which is the cost of opportunity. And we all know that money now is better than money later, right? They always time to invest was yesterday. The second best time is today. So there is no choice to be made, like I said, but although I'm on the other side of the fence and I'm a SR&ED guy, I would recommend always applying for grants first because you get that money up front and then claiming SR&ED on what is left come your year end. And what is SR&ED? So it's an acronym that we throw around a lot. It stands for Scientific Research and Experimental Development. It's a government incentive program that has two benefits. One of them is commonly known, everyone hears about it. It's the investment tax credit or the ITCs. And those typically take the form of a cash fund, unless you have, of course, taxes owing, in which case the CRA will help themselves, as you would know. The other advantage that is not so commonly known is that the cost that you incur in the fiscal year as SR&ED expenditures or R&D expenditures, they are tax deductible. So if you take those costs and include them in your Schedule 1, for those who know the technicalities, you're able to reduce your tax bill come the year end. So you get the tax refund and also you get a tax deduction. CRA defines three types of eligible work. There is experimental development, there's applied research, and there's basic research. So experimental development is the most applied, most practical type of work. And basic research, think of it as the most theoretical kind of work that has no true application. And the example the CRA likes to give is with a virus. There is suspicion of a new virus, or a new virus has been discovered. It needs to be understood, characterized, detected. All of that work falls under the discovery or basic research umbrella. Now that the virus has been discovered, characterized, and what have you, we need to start thinking about how do we neutralize it? What molecules attach to this virus? How do we catalyze certain reactions to cause a certain effect? All of those recipes that are theoretical, they fall under applied research. So we are not selling anything yet. We are not producing anything yet, but we're trying to find the recipes that might work. Experimental development, which is the most common type of SR&ED claim submitted, it has to do with practical solutions. So the recipe has been figured out, and now we're thinking shelf life, we're thinking scaling up of production, we're thinking automation. All of those practical solutions fall under this umbrella. And you'll see on this slide that I say that should work. It's recipes that should work, processes that should work, and variables that should have an incidence. This is intentional because the should means that, you've got this team of engineers, scientists, developers. They're highly qualified professionals, but they're facing an uncertainty or a technological challenge. And these qualified individuals, they start by making an educated guess to resolve that uncertainty or that challenge. And that educated guess is what we call in SR&ED terms a hypothesis. That hypothesis, although educated, it could work or it could fail. And typically the starting point is a failure. So you make your first guess, it fails, you get the results of that first try, you recycle it into a second hypothesis, you try again, etc. This iterative work is what we like to outline to the CRA. And this might sound counterintuitive, but failure is good for SR&ED because it shows that there is challenge, difficulty, and complexity. If your first guess is the right one, then it's pretty unlikely what you're working on requires research and development efforts. Another question that you might be asking yourself is how much am I getting back with SR&ED? I know I gave a range earlier, 35 to 70, 73%, 74%. So it depends on the jurisdiction. If you're based in Ontario, you're based in Quebec, Newfoundland, any other province, the flat rate that is applicable across all provinces for Canadian-controlled private corporations is a 35% refundable at the federal level. And then depending on the province, you get different rates. In Canada, we have a very generous program. One of my favorites is the one you see at the bottom, which is Newfoundland and Labrador, which is 15% refundable, but also allows double dipping. I know it's hard to believe, but in Newfoundland, you can claim the exact same costs covered by grants for SR&ED. And from my personal experience, I've seen a lot of great startups sprout out of Newfoundland. It's definitely a very interesting and lucrative program. On average, we like to say that the return on the dollar for a Canadian-controlled private corporation is up to 64 cents. So how do you qualify for SR&ED? There are two components, a financial aspect and there's a technical aspect. In a nutshell, if you have salaried T4 employees in Canada, contractors that are based in Canada, you consume or transform materials in Canada, Capital expenditures is a new one. So this was introduced in Bill C-15, which got the royal assent end of March, I believe. Going forward, so for fiscal years that ended after December 16th, 2024, you're able to claim capital expenditures that are incremental to SR&ED, as well as overhead costs. So we're talking about utilities, office supplies, maintenance, cost of software, etc. So if you have these kind of costs incurred in Canada and you have qualified personnel, engineers, developers, scientists that do research and development work, or just any kind of technical work, there is typically at least some SR&ED that you can go and claim. And you'll notice here that I put an asterisk on the overhead category, and there is a reason to that. When you claim SR&ED, the government gives you two options. You can go with the proxy amount, or you can use the traditional method. In a nutshell, the proxy amount, you do not claim overhead, but you get a 55% top up on your eligible salaries. No questions asked. If you have a pool of salaries of $100,000 for SR&ED, those percentages I showed earlier, 35%, 8%, 10%, they're applicable to $155,000. On the other hand, the traditional method, it allows you to claim your overhead costs. So maintenance, software, admin, rent in some cases. However, you don't benefit from that automatic 55% top up. Typically, the traditional method is chosen by large manufacturers. Think of a case where you don't have enough salaries to pay for your electricity bills. Of course, you do the math, you see that 55% of your salaries doesn't equal how much you pay in electricity. You go with the traditional method. I would say 99% of SR&ED claims utilize the proxy method. This is just a quick example to show you how the math works. On a 100K salary, assuming 80% SR&ED eligibility, your starting eligible salary is 80K. Assuming that 20% of this individual's time was spent on sales, on meetings, training, and what have you, all that work that doesn't qualify. But then the proxy comes into play and tops up that 80K in salaries with an additional 44K that is free, no questions asked. So the math with those rates that I showed earlier, the 35%, 8%, and 3.5% for Ontario in this case, applies to 124K as opposed to $80,000. So the potential return on an 80K eligible salary in Ontario is $52,000.
We're great. People are putting questions into the chat and answer those questions. So keep the questions coming, guys. Back to you.
Awesome. Yeah, so this all sounds great. You can get the proxy amount. It's a generous program, but of course, nothing comes for free. You need to submit something to the government in order to benefit from that. And there are two aspects. There's a technical aspect and there is a financial one. The technical aspect is pretty straightforward. You submit one or multiple reports that outline your R&D or SR&ED eligible work. And on the financial front, you need to gather payroll information, contract invoices, grants and assistance papers, and so on. This is on your end or on your, but in practice, the report is submitted as you prepare it, but on the financial front, it's just a bunch of so there is a lot of heavy lifting that needs to be done off those SR&ED schedules. There's a lot of spreadsheets, a lot of math, and a lot of proration that is applied before reporting those numbers directly into the SR&ED form or the T661. And this is not to sound discouraging. So of course, there's a lot of math to be done on those spreadsheets. It looks easy when you glance at it quickly, but essentially, the SR&ED program is very, very successful. It has a lot of success rates or very high success rates. 90% of SR&ED claims get accepted as filed. Of the 10% that goes into review or audit, 60% get accepted after modifications. So think of a slider that goes from 1% to 99% of what you initially claimed. It's somewhere in between. And 40% of that 10% that gets reviewed gets denied or rejected. So these are very high success rates. And it spans across multiple industries. So the meat and potatoes of SR&ED is software development. That's the main bucket where we see a lot of applications and also a lot of success. But as you can see from this list here, electrical engineering, mechanical engineering, even food processing. And I can tell you from my experience that traditional engineering disciplines, mechanical, electrical, chemical, they're coming back stronger, or they have been coming back stronger over the past couple of years. So it sounds like, when you think back to what I said about there's a lot of heavy lifting to do before filling out those tax forms. Working with a SR&ED provider is something that is highly recommended. I actually learned that I believe between 75% to 80% of all SR&ED claims are prepared by professionals, and only 20% is done in-house. And there's a reason why we recommend working with a SR&ED provider like SRJ. So your SR&ED consultant or partner or SR&ED provider has a deep understanding of the industry state-of-the-art standards because they work with you, but they also work with other founders and individuals in the industry and have that bird's eye view of the cutting edge technology at moment T. They also have an expertise in the CRA language, so what words to emphasize and what words to avoid. This might sound almost anecdotal, but it matters a lot with the CRA in the sense that you don't want to attract scrutiny just for using, a lazy word or the wrong word, which can ultimately lead to audits. Your SR&ED provider also can guide you on the CRA policy. So what work is eligible, what work is not eligible, as well as the expenditures. Audit-ready documentation. So those spreadsheets and those calculations I mentioned earlier, technically there's nothing stopping someone from just filling out the SR&ED forms without doing any math. You just think back to the fiscal year, we've paid about $200,000 in salaries, about 100K in contractors. You can just go and plug those numbers directly, which can get you a successful claim. However, in case of an audit, working with a SR&ED provider that keeps traces of all the work that goes behind those numbers is something that is crucial and helps win audits. And audits, I say that audit defense is an art. So I like to say that audits extend beyond a factual exchange of information. Myself and a lot of my peers in the community, we know these research and technology advisors, financial reviewers. As you work with them, you kind of understand how they operate. You understand the dance. Think of your SR&ED provider as your defense attorney. They need to be present. They interject and they make sure that only the details that need to be shared are shared. And of course, they aim to guarantee the best outcome for you. And I want to go back to that 90% acceptance rate. So if you factor in the fact that 75 to 80% of all claims are prepared by SR&ED providers, there's definitely a correlation there. So yes, doing your SR&ED claim in-house is something that is absolutely feasible. But if you factor in the risk versus reward component of every claim, then expertise is what defines guidelines and allows you to make educated decisions and educated choices. The last thing here I have is that there have been some improvements to the SR&ED program. So I mentioned Bill C-15 that got royal assent recently. And to be frank, these numbers, they do not typically apply to early stage startups, with the exception of perhaps capital expenditures. But essentially, the expenditure limit has been increased from 3 to 6 million. This is the limit that dictates how much you can claim at that 35% refundable. So it's been doubled. And that limit, the expenditure limit, is a function of the box you see in the middle. So prior to this change, your expenditure limit would get ground down from 3 million if you had 10 million in taxable capital, all the way to 0 if you had 50 million in taxable capital. Now, 10 million has been replaced with 15, and 50 million has been replaced with 75. So larger companies can benefit more from the SR&ED program. Regarding capital expenditures, with this new change, if your fiscal year started after December 16th of 2024, you're able to claim machinery and equipment, heavy equipment that is incremental to SR&ED. This is obviously very important for manufacturing companies. Arif.
Amazing. Thank you so much. You know, I'm a huge fan of the SR&ED program because it is very well defined. And what is less defined is the grants space, to be quite honest. And, you know, a lot of times when I'm talking to people and there's a couple of things I like to highlight, which before I get into stacking, I just want to maybe speak to really quickly. So number one, you know, there is a lot of grants available in Canada, federally and provincially. And part that can itself be sort of like a bit of an issue, because then you kind of have to go out there and hunt and figure out which grants are applicable and which are not applicable. So there's a challenge on that front. The second challenge I would say is that some of the more well-known larger grants that are available can also be a challenge to get when you're starting out, because a lot of those bigger grants, like, you know, IRAP being the best example of that, they will generally look for businesses that are a bit more established, that have proven a bit, you know, themselves a little bit before they'll give out money, at least in large chunks. So that's you know, that's where the SR&ED program tends to win big time, because it's defined. It is, if you apply for it, you're eligible, you're going to get the funding. Grants can be very, very subjective, and that's where the challenge comes in. But let's continue forward. So let's talk about stacking. You know, Amir's already alluded to this a little bit in his SR&ED piece, but stacking is essentially the idea that if I'm working on a project, what can I do to maximize my government funding? So can I access multiple programs to fund the same project? And the short answer is that yes, you know, you can stack when you're trying to fund a project. That's the short answer. The longer answer is that you have to be careful about it, because while it is completely legal to stack, you have to ensure that you don't trip up anything that's going to get you into hot water, whether it's with the SR&ED program or whether, you know, you're applying for a grant or whatever it might be. Next slide, please. So some guidelines on when we're thinking about stacking. So the most basic guideline is you cannot claim the same dollar twice. Now, again, you know, I'll allude back to Amir's point earlier about Newfoundland being an exception to this rule, right? And that's probably the only exception to this rule where you can apply for a grant, and then, like, let's say you're applying for a grant for somebody's salary, right? And you get the grant, and then you can claim the same full salary, you know, as part of a SR&ED claim. You know, in contrast, you can't do that in the rest of the country. So just to use a really simple example, if I'm paying somebody $100K and I get a $50K grant for that salary, and I was in Ontario, I'd only be able to claim the remaining $50K as part of my SR&ED application. That is not the case in Newfoundland, right? But generally, you cannot claim anything twice. Moving on from that, you want to, when you're sort of looking at combining grants, it's good to look at it vertically. So a federal with government, federal with provincial grant kind of thing. That's how you want to look at it. That tends to go over better as opposed to trying to access grants that are both at the federal level or both at the provincial level. Another sort of guideline is to look at grants by categories. So there's a lot of grants out there, and again, some that we're going to talk about that are very much geared towards just salaries. Like you're trying to hire somebody and they're going to give you a grant for a salary. But then there's also a lot of grants out there that are geared towards other things. So for example, let's say you're looking to export outside Canada and you're going to incur travel costs and marketing costs, while there's a Canada grant for that, right? Which is not geared towards salary per se, but more so these other expenses. So you can try and access multiple grants by accessing, like your project is you're trying to leave, trying to not leave Canada, but export outside Canada. So you might have salaries associated with that. You might access a specific grant for that. And you have other expenses, you might access a specific grant for that. And then the last thing to be aware of is that there is an idea of a grant cap. And so, at a high level, that number is about 75%. And the best way to ensure that you don't sort of fall offside of that is that when you're applying for grants, they will usually ask you, do you have any other grants in place for this project? And you should be forthcoming about that information so that, again, you're not tripping up anything on that front. So just wanted to cover some, and again, I've already alluded to some of these already, but I'll just cover them again. Some potential stacking strategies. And again, this is not an exhaustive list. It's just an example of things that are very common. So IRAP and SR&ED, I would say probably is one of the most popular stacking that happens, right? You can go to IRAP, get a bunch of funding, and then, let's say they give you $1 million to fund whatever project you're working on. Ultimately, you end up spending $3 million on it. So that difference of $2 million, as long as you're doing SR&ED eligible activities, you can claim that difference on your SR&ED filing. So that's sort of a way to stack those two grants. Another one that's really common is, again, IRAP plus the Canada Ontario Job Grant. Because IRAP is not necessarily only designed to cover, talent, salaries, or whatever it might be, you might go to IRAP and say, hey, I need funding for equipment or for infrastructure, whatever that may look like. And they fund that portion. And then you go to the Canada Ontario Job Grant to get funding to train your people to use that infrastructure. So again, a way to access a couple of grants for the same project, but different expenditures that are part of the same project. And then the last example here, which I've already alluded to again, is the Canada Export plus a hiring grant. In this case, we're talking about the IRAP Youth Employment Strategy. So again, you can get Canada Export's grant to cover some of those marketing, travel expenses as you're looking to, grow your business beyond Canada. And then you can couple that with a hiring grant to hire in Canada to support your efforts to export outside Canada. All right, next slide. Sorry, next slide, please. Sorry, I apologize. I didn't tell you. Next slide after this as well, please. All right, so now we'll talk about, as I mentioned earlier, some of the hiring grants that are out there that, again, are, I'll say, more well-known and can be accessed pretty easily by most startups. Next slide, please. So the first one here is the Student Work Placement Program. Sorry, May, next slide, please. So this one is specifically designed for post-secondary students. They will cover, roughly up to 50% of the wages of whomever you hire. That number can go up if you hire equity-deserving groups or underrepresented groups. And so essentially, from a numbers perspective, it works out to about 5K to 7K, depending on who you decide to hire. The one important point here is that it has to be an incremental hire. In other words, you can't replace somebody in your organization by going through this. It's got to be an addition to your employee count, if you will. And then the last point here is that because you're hiring post-secondary students, you can generally apply any time, but it's usually tied to the post-secondary semesters. So for example, we're in April right now, so you'd be applying right now for the May to August semester, if you will. Next slide, please. All right, next up we have the Canada Summer Jobs. Another very popular grant, and one that we actually apply for ourselves as well. So this one doesn't have a requirement that you need to hire anybody that's in school, but it's more so around the age of the person that you're hiring. So they're looking to target youth hiring from the ages of 15 to 30. They'll generally cover up to 50% of the provincial minimum wage. So it will be dependent on whichever province your business is located in. There's also limits on the number of hours. So there has to be minimum 30 hours. So again, the idea being that they want this to be a full-time role. And then the maximum they'll cover is usually 16 weeks, which is roughly, again, the 4 months of the summer that we have. The applicants for this do come out in December, and then they close in December. And then usually you hear back in like March, April on your status and what gets approved by them. Next slide, please. The IRAP Youth Employment Strategy. So this one is, if you were looking to hire in the tech space, this is a grant specifically designed for that space. So innovation, R&D, tech, that's what their focus is. So that's kind of like what you're looking at over here. Again, no requirement to be in school, but you do have to be a graduate. So you do have to have a post-secondary degree or diploma to be eligible. You've got to hit the age range of 15 to 30. And then they'll cover up to $30,000 per hire. And the great thing about this one is that it really is designed for longer term hires. So usually it's 6 months to a year that you're looking at to access this hiring grant. Let's go to the next page, please. Next slide, please. Last one is Mitacs Accelerate. So this one is really about deep research, because you're getting access to master's students and postdoctoral fellows. So that's really where this one comes in very handy. They will generally start with 4-month blocks of internships, and that internship is the amount is $15,000. Now there is half of that does have to be covered by the employer. The remaining half will come from from Mitacs. And again, the good thing about this grant is that you do have the ability to apply for multiple 4-month blocks. So again, you're not just tied to having this person for 4 months. You can get this person for 12 months if you applied for 3 4-month blocks at the same time. And that's a wrap.
Great. Arif and Amir, thank you for giving that comprehensive review of the programs and SR&ED and grants. So we've got a few more questions that are coming up I want to ask you about. So some of them, but I want to also thank both of you for being on the ball and answering the questions as they came up. Let's take a look at, so there was one question was about an international startup fund group seeking funds from Canada. Is that possible? I think this was someone who was overseas.
Is there a grant specifically for international businesses coming into Canada? Is that the question?
Yes, I think so.
You know what? Nothing specific comes to mind from from that perspective. I know like Canada did have a startup visa program, which I think they suspended temporarily, if I'm not mistaken, on that front. So that was in place. Outside of that, again, I would say, we do have a focus on helping what's already in Canada to grow as opposed to what's coming into Canada. I think there's a little bit less in that space. Probably something we need to work on, to be honest, but I'll leave the politics out of it.
Okay, that sounds good. Another question was, is there a site or application that has all grants available across federal, provincial, and municipalities in Canada where ventures can tap into? So basically the idea of a single window for everything.
There's actually a Government of Canada, here, I'll share it right now if I can pull it up.
Sure.
Website that you can use to try and find it. Again, I caution you because it is it can be very overwhelming when you start looking through this stuff, because as you work through it, you'll find it'll spit out like 350 results as an example. And that's sort of like the challenge that I was referring to earlier, where it's like there's so much available. And
Yes.
sorry, I'm not able to find the link, so I'll try and find it afterwards, and I'll share it with the team here, and they can maybe share with everybody that attended. But I would say that's where like working with incubators like Canada Startup Association is helpful, because you have fellow founders to have a discussion with about like, hey, like what grants are you applying for, and kind of like bounce ideas off each other on like what you can access. But I will try and find that link, and I'll share it.
Sounds good. And I think I see Steve Cato. Steve, are you still on the call? If you are, if you can go off mute.
Yeah, hi.
Great. Steve, do you want to ask your question?
Oh, sorry. So you outlined several sort of grants for hiring students or young people, etc. And I was wondering whether there were limits to how, like, for example, so one of them you said that, you couldn't, for example, fire an existing employee and hire a student, right? Which I understand the purpose of why that's structured the way it is. But in a situation like that, say you have hired this person as like a part-time student through what was it? It was the student sort of you applied by the semester basically, yeah. And then when they graduate, would they then qualify for the IRAP youth employment scheme, for example, or would they have to have not been already involved for that? Like, how coextensive? How do those different granting programs for young hires fit together?
Yeah, generally, like I haven't seen any limits being applied like that. Again, whenever you're sort of going across programs, you would disclose that you've received previous grants for certain individuals. But generally, that would work. Like you could potentially stack, I guess, not the same time, but at different times as well, right? So you apply for it when they're a student, and when they graduate, you apply for a different grant to bring them on and, as a full-time person for 12 months or whatever it might be.
Awesome, thank you. Very helpful.
Yeah. No
Great.
worries.
Thanks for your question, Steve. We're going to go to Mohammed Anas. Mohammed, you're on the line if you want to ask your question.
I have a Canadian company, but I'm getting my products built in India and eventually be owned by a Canadian company, and launch sales will be done in Canada.
Hi, Arif. Actually, someone else also asked similar question. Basically, we have a Canadian company, and we have partly some people working in Canada. Some people are outside Canada, like some kind of support guys working here in India. So would it be eligible for that? Because we are a Canadian company, and we do all our business globally. So from that perspective, I wanted to know.
Are you asking about the eligibility for SR&ED in that case?
Yeah.
So, Amir, if you're here, I'll maybe you can chime in. But the short answer I can give you is that the bulk of the stuff that we've talked about today is really geared towards Canadian spending. So when we go to apply for a SR&ED claim, we specifically look at what did you spend on Canadian salaries, right? And what did those Canadian salaries do in the R&D space to be eligible for SR&ED? And again, like we do see that challenge come up every now and then, because the reality is that a lot of businesses do access offshore developers, right?
Yeah.
And that can kind of that will essentially mean that you won't be able to claim that cost as part
because
of
eventually my revenue comes from Canadian and American market, right? North American market. So whatever we get it in Canada, we are paying HST, everything is there. So I believe that we should be eligible for those grants as well, when we are paying tax completely in Canada.
You can claim it on the Canadian portion of your expenses, but there's no there's really no leeway on offshore, again, like outside Canada expenses, because they are not like, you have to look at it from their perspective. What they're trying to do is stimulate the economy by putting money back into the employer's pocket, or so forth. So they're going to focus on the Canadian economy.
Actually, I hope you understood. Basically, it's a kind of sales support kind of a stuff, preliminary lead generation and all. We do it in India, and then eventually closing, and all sales guys are sitting there and doing it. So from that perspective,
I'm happy to connect, like maybe offline separately, so we can talk in more detail.
Sure,
but happy
I
to
sent a connect request in your LinkedIn as well.
Perfect.
Maybe we can talk it further.
Sounds great.
Thank you, Brent. Thanks for giving me an opportunity to talk.
Oh no, of course.
Thanks
for your question. But a few other questions at the time we have left. Nikhil, do you want to ask your question, please?
Hi guys, thank you for this presentation. I actually wanted to ask that I have a Canadian company registered. I registered recently, actually, and I'm working on a AI fintech product, and it's pretty, kind of technical and a lot of experimental stuff. But the problem is just that I was outside Canada and I got stuck because of the war, and I'm working. And as far as I know, I've read Shred and all these grants. I cannot claim as far as and I'm outside, but I don't know about the legalities and everything. So I was just, kind of wanted to have some help assessing my business and everything, eligibilities and everything. That.
Yeah, again, I would suggest an offline conversation to go into more detail, but like just very generally speaking, when we're talking about salaries or contractors outside Canada, those are generally not eligible for shred, and generally most grants would also not they'll also not be eligible for most grants either. So, but I'm happy to connect offline and talk about it a lot in more detail and get into your specifics. But I'll leave it there for now.
I think. Thank you. Kwabena, I think the question, just to paraphrase the time we have left, was wondering who on the panel they should contact to have their business assessed to apply some of the opportunities.
They're happy to reach out to me or Amir.
Right. And I think you see Arif and Amir and also Patty's
Patty,
email addresses on the screen. Shelley, do you want to ask your question?
Hi, thank you. So our company is a startup and we're self-funded, and we have no actual employees, just the two of us who don't take salaries. But we have hired various people to do jobs like work on the website or produce drawings for us, that kind of thing. I'm wondering, I don't know much about Shred. Obviously, I won't get a grant for that. But is there any?
I will do that. I will also do the test too.
Okay. Sorry?
Yeah, can I get a USCNS?
Sorry, if you're not asking a question, if you go on mute. So Shelley, just finish your question.
Sorry, I'm wondering how I would look into Shred to see if there's anything that we've done that we can actually claim. And then I'm also very curious about the grants, but I'm waiting for that big long list.
Yeah, for sure. So on the Shred side of things, if you do hire companies, they're effectively contractors to your business. So you could potentially claim those costs as part of your Shred claim. Again, the caveat being they have to be Canadian contractors, right? So Canadian companies.
Okay.
But that's theoretically you could claim that. So happy to look at that and see if that might be worth exploring. On the grants side of thing, again, like grants outside of hiring grants, which obviously are based on when you hire people and talent grants, a lot of them are very project based. So it's not to say that you couldn't access grants for bringing on contractors, but you kind of have to go through a process to understand what grant you could apply for that would sort of look at the overall project and potentially fund part of that cost. And then as part of that, they would also assess like, okay, are you hiring? Who are you going to be contracting with, kind of thing. And again, focus being Canadian spending, obviously.
Okay. So also under Shred, it was under Shred that you could get machinery or, if I...
Yeah. So that's a recent, so for a number of years, capital expenditures used to be part of the Shred claim. And then I want to say about a decade ago, they decided they were going to remove that from the Shred claim. And then this past year, they've brought capital expenditures back into that sphere, if you will. So if you are a capital intensive business and you're having to spend a lot of money on capital stuff to fund your Shred projects, then yes, that can be part of your Shred claim as well.
Excellent. Thank you for your question, Shelley. I think the other question we had has been answered by Amir. So with a few minutes left, I think I'm going to ask Arif and Amir to sum up. But just before we do that, let's see, we have just a quick commercial break. So I want to encourage everyone who's joined today to visit the Canada Startup Association website for more details, especially on the GAS Summit. Again, this is the annual gathering of businesses who are representing all different communities across Canada, founders, investors, to discuss in terms of building Canada's ecosystem, especially for export. The event is September 21st at the Mississauga Convention Center. It's a day-long event. The early bird discounts will be announced soon. And I encourage you also, if you want to support the ongoing work of the Canada Startup Association, to consider being a partner for the event. You can reach me at brentcanada.info for more information on those partnership opportunities. And you can see in the notes that the Canada Startup Association email address is canadastartups.co. Just before I ask Arif and Amir to make some final remarks, they can be reached on their emails, which are on screen right now. And you can also reach out to their colleague, Patty. So Arif and Amir are going to have you make some final remarks, and then we'll also go back and we can have both of them take a look at any questions that we weren't able to go through today. But thanks again for everyone's participation and questions. Arif and Amir, back to you.
Yeah, no, thanks for having us, and hopefully it was informative. I know a lot of you are curious, and rightfully so. So I would encourage you guys to reach out and connect with us. Happy to have a discussion with you and see if there's something that we can help you with. Our contact information is there, and I'll leave it there.
Yeah, thanks for having us today. Like Arif said, I hope it was informative. And yeah, please don't hesitate. You have our emails, reach out. I typically like to shred, you don't be your own judge. Don't assess your work by yourself. Talk to us. Let us make that call. Let us tell you if it's eligible or not. And yeah, we're more than happy to take this offline and discuss in further detail.
Arif and Amir, thank you so much for your participation today. I also want to
you.
thank the Canada Startup Association for sponsoring today's event, and look forward on our website for more information about future events, including the GAS Summit and other upcoming webinars. Thank you, everyone, for joining today, and we'll see you again soon. Take care.
Thanks, guys. Bye now.
Thank you, guys.
Thank you, everyone, for joining.
Thank you.
Thank you.